While we try to be as helpful as possible, this podcast should not be considered as professional or financial advice. It contains general information only, and you should seek out professional advice for your own personal circumstances before making any financial decisions.
Welcome back, guys. I'm Gioia.
And I'm Nick.
And I'm Maddie.
And I'm Gioia.
And this is the Enthusiast Lab. Welcome back, guys. So today's episode, we have the lovely Gioia and Maddie from Oui Finance.
And welcome back, by the way.
Yes.
Thank you.
Thank you for coming back.
They didn't have a choice.
Both your episodes went really, really well
Fucking
on
sick,
socials.
Yeah.
So we thought that it would be great to do a finance frequently asked questions. And this is like a combination of questions that we came up at Mr. Enthusiast and like a frequently asked question kind of sheet that you guys have, and we've kind of like married them together.
Yep.
And have a good like variety of questions, I think, that first home buyers, second home buyers kind of ask and like don't know the answer to straight off the bat. So let's start with the first one.
Yeah, go for it.
Everyone's so quiet.
Julia, you lead.
Sorry.
You lead, we follow. So
Okay. The first question is, why use a finance broker?
Good question. I'll probably
Yeah,
start with
go
that
for
one.
Okay.
Using a finance broker compared to a bank is, I think I mentioned in that first episode with you guys,
Yes.
it just gives you a lot bigger of a variety of options. Obviously, as mentioned, if you're just going into one lender, they're not going to say the bank down the road is going to be a better fit for you. So as a mortgage broker, we don't have any tie to any specific lender. So it's all in the client's best interest. So it's good to know you're getting the best option for you.
Yeah,
perfect.
and you guys have like quite a large variety. It's not like 3 or 4 banks. It's like 20, 26. Like there's a substantial amount.
We've got over 40 lenders.
Holy shit.
Yeah.
On our panel.
I thought there was 20.
It's, I guess when you're talking about construction, it does narrow down that space, because most lenders that do construction will require 20% deposit. So when we're looking at anything under 20%, it just narrows those options down a bit.
It starts narrowing, but they are there.
Heaps of options. Very out of those 40, there might only be, like you said, 20 that fit our niche.
Yes.
Other ones are for all variety of reasons.
Cool. Yeah,
Silly question that I've never asked you guys before. Do you guys only do construction and home loans, or do you guys do like car loans and stuff like that as well?
We can do car loans and personal loans as well. We definitely mainly focus on that resi home loan space. But we have had a few clients that say after handover, they maybe want to consolidate some debts, or now they want to get a car loan because they've got their home loan all sorted. So we can look at that, but we'd prefer them in the home loan.
Cool.
We can still assist with the asset finance side though.
Yeah, cool.
Yeah, I don't know why I've never asked you guys that before. Okay, so what is...
There's not enough money in it. I'll say it. Yeah, fuck off, Nick.
We just don't want those debts going too high. Like, less debt.
Literally.
Less is best.
Yeah.
What is the difference between construction finance and normal finance? Normal finance being
Like as in established homes?
Established homes, yeah.
You want to take that one?
Sure.
Bossman's just delegating to fucking Maddie.
She's like, you're on. So the difference between an established finance, like the process, just everything in general?
Like if I was a
We were
client...
just turning around and
Yeah,
just
well,
look at Julia.
if I was a client and I came up to you and I said, I don't know if I want to like build a home or go into the
Or buy a
established
home.
market, what's the difference?
Yeah, as a first home buyer. So the difference is probably the benefit on saving on a deposit, I would say majority. So as a first home buyer, if you're building, you actually don't pay stamp duty if your block is under the 300,000 space. And if you do pay stamp duty, it's only on the land price. So established, it's on the total purchase price of the property. So it's usually always that initial savings in your deposit side of things, as well as being eligible for the first homeowners grant of $10,000 when you build, versus you don't get that with an established property unless it's never been lived in before.
Okay.
So you get quite a significant amount of savings in that initial down payment, I would say. The process in terms of how we lodge application is very similar. It's just whether we're dealing with build contracts or like just an offer of acceptance with an established house. Yeah.
Okay.
And time-wise, obviously, takes longer to get the house constructed. So you guys are looking after that client for a lot longer, like in the back end.
Definitely.
Versus an established home where you guys kind of wham,
Bam,
thank you,
Yeah.
ma'am.
And then 12 months later review their rate, but most of the time they're on a pretty solid rate to begin with.
Yeah.
So
Yeah.
Okay, the next one, I think this one's from you guys. Are the land, build or established deposits included in the total deposit at settlement?
Yeah, we do get this one come up a lot for established and construction, where you might pay your land developer and your builder, 2,000 and 2,000 or whatever those deposits are.
Yep.
And a lot of the time we get asked, so then is my total deposit at the end on top of that? And luckily it's not. So anything you pay up front to your builder or the land developer or your real estate agent, if you've bought established, that will then be deducted from your total deposit at settlement time. So you're really just paying it up forward a little bit more.
Forward.
Yeah, we get a deposit receipt, send that to the bank, they deduct that off the total for you.
Cool. Yeah, perfect. I think that's a very common misconception with clients that, I need to pay more on top of what I've already paid.
I've got to pay you a deposit and then I've got to pay more to the bank, but it's all up. That the bank will see that deposit receipt and virtually credit it for you.
Because it is towards that thing. It's not like you're just paying it into some random blokes.
Yeah.
And most of the time it's in your schedule breakdown in your bill contract as well. It will say the PPA deposit that you've paid, so the bank sees that as well.
Yeah,
cool.
sweet.
It's usually always 6,500 for your clients, like 3.5 to La Vida.
Yeah.
Three is the land.
Usually three,
So
The land ones have gone up a bit.
Oh man, like we're getting some in the south, like near Manchester, so South Yonder up there. They're 10k deposits just for the land, but they do have some of the cheapest land in that whole corridor. So
50-50.
and 50-50. So it's really come to a point where it's like trying to navigate. I'm guessing the developers just trying to navigate their way through certain clientele. If you don't have that cash up front, maybe you're not the right clientele for them. Look, at the end of the day, fair enough. But like, there's heaps of them still like $1,000. A lot of them have changed to 3 now, some 5, and then you get some of them at 10, which is.
And look, purchasing established is much higher up front as well.
Huge,
I've had clients put down upwards of 20, 25. Yeah, you can get some really high amounts, and you're up. You might have your 30 days for finance, but you're putting that cash down ASAP. So
it's a lot.
You don't have time to save that up. If you want that property, you need that cash now.
Yeah.
Big difference, When does the bank take the full deposit?
That does vary dependent on the lender.
Okay.
But 9 times out of 10, I would say, for most of the construction ones we do, it is at settlement.
Right.
There are some fun banks that we like to
That
deal with
split it, hey?
that split it. Yeah.
They do like land at settlement and then the rest afterwards.
at slab
Yeah.
down, something like that. Yeah.
And look, that can get a little bit messy. However, the plus side of that is cash flow wise.
Yeah.
You've got a little bit of time up your sleeve, but you still need to show the bank that you have that deposit anyway. So you can't just save that up in between.
Okay. So you still need to show the proof of funds before you can actually go ahead. Yeah. Okay, cool.
And I think this was another one from you guys. Who is eligible for the first home owners grant?
Do you want to take that one?
Yeah, the fun ones. So who's eligible for the first homeowners grant? So obviously first home buyers, number one. So you couldn't have owned a property in Australia before. I believe there's a cutoff of 10 years, however. 10 years over, then it can be considered depending on, obviously, you don't have any link to the title and things like that. Also being a permanent resident or an Australian citizen. So you can't be on any temporary visa to be eligible for that. It's mainly just those 2 requirements.
Can be from New Zealand, because I know we get
that's
question
what
a bit.
we've been getting that lately.
Yeah. Look, that is different when we're talking about the low deposit, some of the low deposit options, but for the actual 10k grant and the stamp duty exemption, NZ citizens are fine. If you're living here.
Because that's where I think we've had a few that get caught out. It's some of those low deposit schemes. They are the NZ. Like a lot of the guys from NZ, they are technically considered as like a PR, but it's on a subclass visa or something.
And it's recently been changed with the scheme to now be accepted.
Oh, it has now?
Yeah. So originally...
Fucking about time. Jesus.
Pass that information on.
I know. So that we obviously don't, it's dependent since the threshold hasn't increased with the scheme. The amount of scheme applications we probably get in this current market is
substantially low.
But now they have at least allowed New Zealand
I just
citizens.
love the fact that they're like, oh yeah, we'll do it now, even though you can't afford shit. So then like you're sitting there going,
what the fuck?
Yeah.
Where was this
Thanks. Yeah.
literally, where was this a year or two ago? Because it's been a couple of years now that
It has.
it's been about 2 years. I
Yeah.
think.
Longer, I
Yeah,
think.
it has.
Longer,
The
yeah.
scheme's been around for quite a while, but that they never had New Zealand before, and then they did
Yes.
accept it, but the criteria was very, very vague,
Yes.
and then it ended up being, hey, you've got to be on a certain PR visa, basically,
Yes.
which not many people are from NZ
No.
because they can come here.
Yeah, exactly.
And they get all the basically
All
rights
the same
as-
benefits, and you still get the
exactly.
first home owners grant as
Yeah.
well. So the Office of State Revenue versus like lender policy, a
Yes.
bit conflicting, but now it's
yes.
not.
But now it's not. So it's all good. So win-win.
Yeah. This is one that I think a lot of people get confused with as well. And my brother's one of them. So my brother has signed up. He's building a home. David, yeah.
Shout out to Dev.
So shout out, Dev. And he asked me this question. And like I didn't realize a lot of people didn't understand this one because we're in the industry for so long. It's just something that's common knowledge. Is the 10,000 first home owners grant paid directly to the client?
No,
Oh.
no. So this is, I always go over this in my finance appointments with the clients. I always make it very clear when we look at the breakdown of funds that the 10K isn't credited into your bank account as like a deposit.
Yep.
It's credited at time of land settlement. So with your settlement agent, liaises obviously with the
Yep.
bank, and it's credited there for funds. So you don't really see it. You don't really have anything to do with it. It's just there and covered.
Yep.
So then you pay the remainder.
Yep.
Yeah.
Okay. So for a hypothetical here, if someone needs to save 30 grand, like, you know, with assessor finances, you've come back and going, you need to save 30K so we can get it done. They can't go save 20 grand and then add the 10,000. They're going to have the 30 and then the 10 will get added on
Correct.
top.
Yeah.
towards all
The funds we quote are always taking into account the FOG anyway, the first
Okay.
home owners grant, which is
Fog.
FOG.
we say a lot.
Yeah,
Yes.
so that's always taking that into
Yeah.
account. So everything we give is left to pay by you, including all the fees, what you're eligible for. This is what you actually need cash wise.
Yeah.
Yeah.
Perfect. Because normally, a lot of the time, the first home owners grant, that 10 grand, that helps absorb like the settlement fees and bank
Yeah.
fees, all that bullshit. And then I'm guessing the leftover helps reduce the loan. Is
There-
that
yeah.
pretty much
The
roughly
deposit,
about there?
yeah.
It's
Yeah.
probably about between, you always pay your rates for the first
Right.
year.
Yeah, because of the land.
Which we
yeah.
allow. And then you'll have some title fees from like Landgate, which we can't avoid, unfortunately.
Yep.
Settlement agent costs. So I'd say it's about 5 grand, just under 5, maybe like
Yep.
4, 4, 4, 8. And then the rest of your first homeowner's grant will be towards.
Roughly.
Just roughly 444.
Oh, sorry.
we see it in the funny position.
We see it every day, so you kind of know, all right, like this is this.
Just a guess.
Approximately.
Just a guess.
To the dollar.
Figure.
Yeah, and then the rest is, as you said, absorbing some of that
Yeah.
deposit as
Yeah,
well.
perfect. Perfect.
Okay, so what is stamp duty for first home buyers?
As in a dollar figure, or just what it is?
What it
it
is.
is. So it's plain and simple terms, like the government's just charging you a fee.
Yep.
Unfortunately. So yeah, stamp duty is a government charge on the block of land, or as Maddie said before, like the whole established house. And that's why building is so much more beneficial for your first home buyers and even for second home buyers, because you're just getting charged on the land portion.
Yeah.
As soon as you get keys to your home, if you go and sell that and another buyer purchases that, they're paying stamp on the whole figure, which is
Yes.
way more. And I would say it's roughly like kind of increments, goes up in increments, but it's about 2 to 3% if you're
Okay.
trying to work it out
Yeah.
in your
Yeah.
head what it
Roughly.
would be.
Yeah, okay,
and
cool.
there's unfortunately no getting out of it.
Nah,
No
nah.
getting it back, no getting out of it.
Not with the government. They got to put their
No.
fucking hands into everyone's
No.
pockets.
So yeah, unless you're under those thresholds, no chance.
Well, that
Cool.
follows up on the next question, which is, does stamp duty vary? And I think a lot of people don't know that it varies, or maybe they do, but like they don't know how much or by what. So saying, 2 to 3% roughly of the land loan when it comes to construction is a good rough figure.
Yeah.
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 You're giving me such a
Yeah, I
such a
am,
confused look.
because if we're talking about first home buyers,
They-
you've got that exemption from 300,000 or under. What's a good question to follow up on, because you're going to confuse people, is
Sorry.
if the land, like what's happened at the moment, all the land developers fucked around and now they're finding out, they ramped up their cost by over 100,000 as an average, right? So now a lot of the land is around 330,
Yeah.
350, 400K. Is there obviously they have to pay stamp duty now, a lot of the first home buyers. Is it at the full rate?
It's at a concession rate.
It's at a concession. Is there a limit, like a cap to that?
450?
450.
Yeah.
Okay, so it's slowly, you still got to pay, but
Yeah.
it's substantially lower than
A lot lower.
than the total amount. Okay, cool.
And then above that, you're paying full whack.
Full whack,
if your
yeah.
if
Yeah,
your block
okay.
was like
Look,
700 grand or something.
If
then,
you're spending $450 on the block, be prepared. You're gonna have to fork out
Yeah.
some serious
yeah,
cash.
and that's actually a good point too about the first homeowners grant. There is
Yes.
a cap on that your total house and land price can't be over 750.
Okay,
Yeah.
cool.
So we are kind of creeping a little bit towards that
Yeah.
now. Whether or not they change that, it's been like that for so long, so I don't know. But it is capped at 750.
Yeah, okay,
Yeah.
cool. And let's say if it's $7.50 and $1, then boom, it gets wiped out.
Yeah, we just kind of want to take that dollar out.
Yeah. For
Yeah.
you? No. No, fair enough. So as soon as it
Yeah.
goes over that, then all of a
Absolutely.
sudden, whatever your deposit's meant to be,
Add
add 10.
10.
Yeah.
Cool.
Okay, so focusing on construction finance at the moment, what are progress payments?
Do you want me to go?
No, I don't mind.
Okay.
So progress payments are essentially following the schedule of your build contract. So the progress of your build. When you settle on a construction loan, you settle on your land only. Of course, you can't move in on a vacant block. So the banks, well, things like
Just pitch up a tent.
yeah, literally. I mean, some people probably would.
Yes.
But so what majority of banks will charge interest only
Okay.
during the construction period. Some banks like CBA, Commonwealth, they will charge principal and interest, which is one of the only lenders that do that. But basically it's interest only and your progress payments are per stage of the build that you're at. So it follows that HIA contract and it'll outline each stage. I believe there's usually about 5.
Yeah,
Yep.
an average about 5 plus like the deposit
The
remainder.
PPA and
Yes.
things like that.
Yes.
And what it means is as you reach each milestone with the builder and you get your slab down and things like that, your loan amount is going to increase by the amount that you needed to pay for that stage until it's fully drawn down to the loan that you went for in the first place and got approved on. So the progress payments are what you sign off on from your builder.
Yep.
You send it back into ourselves, we send it to the bank and they'll release those funds and your loan goes up by that amount and so your repayments increase in increments.
Yeah, cool.
Yeah.
And then is it normally a month after you've picked up the keys, that's when your first principal and interest starts?
So, from key handover?
Yeah, from key handover. So like, as you said, like it's
Yeah.
slowly building up and obviously there's normally most people, I'm guessing it's interest only during the
Yep.
course of the
Yeah.
build.
Yep.
So when will the full repayment begin?
So it depends on the frequency that they selected their repayments to
Okay.
be to begin with.
Yep.
But it's default to monthly. So
Yeah.
it generally comes in that month after. But the
Okay.
bank will see once your loan's been fully drawn because on your last progress invoice, you sign it off and it will be PCI stage or something like that.
PCI or handover?
Yeah, key
handover.
handover. Yeah, the last ones obviously lock up.
Yes.
And then we need to send in evidence that the client has building insurance now because
Right.
now obviously the house is up and running.
Yes.
So they do their own little valuation on the place. They get the insurance with the last invoice and then they obviously note that your loan is fully drawn down, which is when they'll start switching it over to P&I. So it will come into effect your next repayment from
okay.
there
Yep.
to when it's scheduled for.
Okay,
Yeah.
cool. So if they've actually, I want to follow up on that. So during the course of it, you know how you just said that it defaults monthly. Can clients choose to change that to a weekly or
Yeah.
fortnightly during the course of the build?
Yep, definitely.
Yeah.
So when you get loan contracts after formal approval, you can select your frequency.
Yep.
If you didn't change anything, the bank automatically default to monthly.
Yeah.
That's actually a good one.
I also
Cool.
wanted
Yeah.
to follow up on something you said. Will the bank release the last final funds without building insurance?
No.
No.
And like with things like the building insurance and also progress claims, it's really, part of the bank doing their due diligence, covering themselves for risk, but it also covers the client as well. Because if you settled on your land and then the bank just said, right, here's 400K to the builder for your build, the builder could just take their sweet
Take and run.
time
Yeah.
or take the money and run. So the good part about progress payments is that the bank is needing to see proof of that stage being completed, then they give the builder their funds and then
Yes.
you make those higher repayments at each stage as it increases. And it's the same with building insurance. The bank doesn't want anyone to move into their home and then something
Shoots the
happens,
fan. Yeah, yes.
fire or anything like that, without knowing that home is insured.
Yep.
Yeah.
It's no different from like taking out a car loan.
Absolutely.
car
You know,
insurance.
and buying a new car, you need to
Yeah.
have that insurance. Otherwise, they won't release the funds.
Yeah.
You can't pick up your keys.
And it doesn't need to be home and contents. We get asked that question quite a
Yes.
lot. As long as you've just got the actual physical home itself insured,
Yeah.
most people just take out home and contents together because it's usually cheaper to
Yes.
add that in as well. Yeah.
Okay, so going back a bit in the process, when would a client need to pay for variations, and can this be included in the mortgage?
Yeah, it can absolutely be included in the mortgage. However, your finance broker needs to know before we actually get a valuation done on the home. That's ideally, we want to know at the latest right before we do the valuation.
Yep.
If we know before that, even better, because it means we can put in your finance application with the bank with all your variations included. But I think what's hard is that some people get their finance and then they might do their pre-start later or their variations later.
Yep.
Once that finance is approved and you're settled, we can't go and add those variations into the loan. So they would need to be paid according to whenever your builder would like them paid.
Yeah. Okay.
And just to clarify, I know we've all talked about this in previous episodes. A formal approval is not the same as a letter of eligibility.
Yes, correct.
The letter of eligibility comes first, and then it's formal approval afterwards. So in between that stage, as long as you're talking to your mortgage broker, that's when you might be able to slot it in.
Yep,
Yeah.
absolutely.
As soon as the building contracts have been signed, because the builder then signs it off. So the client signs the building contract, then the builder signs it, then that gets sent to the broker. That is probably your last time to go and let the broker know, hey, we've got pre-start coming up. We want to include the whatever we do at pre-start with our finances. So then the broker can then sit there and go, cool, let us know. We'll hold the file so that we're not speeding through and then something goes wrong.
Because
I'm
we need to
assuming.
check, of course, if you're going to increase your loan, we need
you
to make
can
sure you
afford
can
it.
service it as
Yes,
well.
yeah. You need to make sure you.
So you might
fucking
include some and
afford
not
it.
others, but you can talk to us about it.
Yeah.
Just
Yeah.
let us know as soon as you can.
Yeah.
Communication is key.
Communication.
Hey, look at that. Communication is fucking key, people.
It is.
We actually already covered that question. Okay, I think a common question that people ask is, how do I afford to rent and build?
You don't. It's very. It's fucking hard.
It's tricky, especially in this day and age. It is tricky.
Yeah.
Any advice?
Well, going back to what I said beforehand, that's why a lot of the lenders charge interest only during your build. So you're not getting charged your full whack of repayments of including your principals. So they try and obviously have a little bit of lenience with that, and you're only paying it as your build stage is obviously going further and further.
Yep.
So hopefully in that time you're not making, once you obviously get your keys, if it obviously levels up with leaving your current rental and things like that, then you're paying your full P&I repayments. So that's probably the only kind of, leeway that the bank maybe give.
They still want some sort of money, and they don't want to continue that interest accruing non-stop while
Yeah.
you're building.
Yeah.
Like, we build quick homes with our builders, but
Yeah.
there's many builders still taking 2+
Yeah.
years. So fuck,
It's hard.
your loan's 650 and all of a sudden it's 700 by the time you build.
Yeah.
Because it just keeps accruing over that time.
Yeah, absolutely.
A question. Back in the day, Keystart used to do the whole $50 a week. Do they still do that, or have they completely wiped that out?
They don't do $50,
Okay.
but their repayment strategy is very good.
Actually, yeah.
Yeah, during the build. So they were charging the difference between what you're paying if you're paying rent or
Yes.
you're privately renting, board
Yes.
with parents, we need to see a letter, between that and your full whack of repayments. But they have just recently changed it to be, it's a maximum of $400 difference, I believe.
Oh, okay.
Okay.
Not as good as $50 a week,
Nah.
and also the difference, it depends what you're paying in rent.
100%.
So if you're renting through an agent, they can see what you're paying.
Yes.
If you're renting privately or boarding with mum and dad, we need a signed letter for Keystart. But there are a lot of changes with Keystart coming at the moment that I think will see them being a little bit more flexible, a little bit more of a league player
Bit more
yeah,
competitive,
a
'cause
little bit more
they've-
competitive.
yes.
So stay tuned, because there's definitely a few things in the works with them that
Yes.
are going to make it a lot easier for clients to be able to go through that process.
Yes.
And that repayment amount during the build is very, very not very easy, but a lot easier compared to the major
Yeah,
lenders.
it's maybe a little bit less stressful, but you still got to take into account the high interest rates and the lower deposit. There's
Yep.
rob Peter to pay Paul.
Yep.
It's all got to
100%
come somewhere.
At
Yeah.
a price.
But
yeah.
if it means opening the doors for someone, maybe there's something to reconsider. Because we haven't done like with yourselves or even with the past brokers. I haven't done anything in fucking years.
So long. Yeah.
It's hard.
And the good thing about it though, I really like their idea of the way they structure it during construction because
Yes.
it's getting you ready for when you move in for what your full repayment is going to be.
Absolutely.
But you're not paying more than that. It's a little bit silly to pay more than that during when
Yeah.
you move in, you stop paying rent or you stop paying board and your payments drop.
Yeah.
So it is really getting you in the mind frame, the mindset of, right, this is how much I'm going to be repaying for the next 30 years.
Yeah, pretty much. And the thing is with them, I think we've had the discussions before. It's you're not locked in with that lower deposit being Keystart forever. As soon as you can, over maybe 12 months or whatever it is, as soon as you've got that equity, go and refinance and move away to maybe a better lower rate. But if you're getting in with 6 to 8 grand versus 60, fucking no brainer.
Yeah.
You know what I mean? If you can afford the
100%.
repayments.
Yeah. Definitely.
Super exciting.
Sorry for like throwing that one at you. It was something in the back of my mind. I met a
Yeah.
client recently and she was like, 4 years ago when they built
It's
the first
50,
time.
so
Yeah,
much.
and I was like,
Yeah.
I remember that. And then I was like, then they stopped. And then I remember the difference. And then I was like, well, fuck, I haven't done anything.
Yeah. I stay tuned. I think that in the next 12 months, we're going to see Keystart
Coming back.
being more flexible and a lot easier for really that first home buyer construction market.
Yes. Killer.
Yeah.
I've got a different question after. I'll let Julia do it.
Oh, you go.
Okay. The newest stuff that just came out, the shared equity scheme.
Yeah.
Have you got a bit of info?
We do a little bit. Not amazing for construction because again the cap is 600.
It is. It's a 600 cap again.
Unfortunately,
Makes it hard.
servicing is great.
Yes.
Look, there are income limits of 90,000 for a single applicant. 125, I believe, was for a couple or a family, which
Okay.
seems low for what
Yes.
you can service for. However, you're only needing to be able to borrow 40% of the loan for a new home.
Wow.
And up to 60%
Fuck.
for an established. Sorry, 30% opposite
30%,
way.
yeah, yeah.
30% for established. So even though the income thresholds, you're like, oh, that's pretty low. You're having to fund less than half of the home.
So they own 60%.
Yeah, so it is shared equity. We don't have any info yet on the refinance ability.
Okay.
Obviously, your income would have to go up. You'd have to be able to service the rest
Yes.
of the loan.
Yes.
It is going to be a select few lenders. I'd say similar to the scheme what we've got
Scheme,
going on there.
Yeah.
Yeah.
But it will be great if they could lift that 600
Cap.
grand
Right, even
cap.
just
It's
a
going to
normal
be
scheme.
very hard.
Yeah.
I have a feeling it's probably more aimed to soak up some of those lower end packages. It's units, apartments, soaking up a little bit of the
that.
stuff that's
Yes.
under 600, but it is going to be tricky at the 600 mark. And it
100%.
is the same in South Australia as well.
Oh.
Over east, way higher, but you also even over east, a lot of the articles I've read have said this is still ridiculous. We can't get people into a home for that price.
Yeah.
So, yeah.
So they're like, yeah, we'll give you a little bit to help.
Give it a little bit.
But also, you can't do
Very
fuck all.
niche.
Yes, yeah, like it's
Yeah.
very niche. So it's not like, hey, let's help the open market, but it makes it's more of a show, honestly, in my opinion, because
Yeah,
if you
big-
can't afford,
Big political move.
literally, because at the
Yeah.
end of the day, if you can't help the general public, what the fuck you doing? Just don't do it in the first place unless you're able to be realistic
Yeah.
about what the situation is. That was great 3 years ago. Brother,
Yeah.
you're fucking 3 years too late.
Well, even Keystart's is higher, 650. So, and
Yes.
that is state government. We're talking federal
Yes.
government.
Yeah,
but
okay.
yeah,
Yeah, cool. Thank you for that.
that's okay.
That's okay. If a client has a default, can they apply for a mortgage?
No. So rule of thumb, it's obviously more of a no. It leans towards because every bank has a different policy with what they consider like an auto decline. So
Okay.
sometimes that means when it is submitted to the bank, when they do their internal credit checks and credit reporting run on the file, if it's under a certain score, which when you have a default, obviously it worsens your score and it makes it quite low in the reds.
Yep.
Sometimes there's no leeway getting around that. However, there are lenders out there that can work around that with defaults. There's definitely something. It's not like a set no. There is definitely room to look into it. However, majority of the time, it's usually not in lender's mortgage insurance space, which
Right.
means you need that 20% kind of deposit to be able to play with.
Yep.
So your servicing needs to be quite high as well because their rates are a lot higher on more high risk applications.
Yep.
So a higher deposit,
High interest
high
rate.
interest rate,
Yeah.
and you can look around it. Otherwise, depending on when it's rolling off the credit file, when it's paid, things like that, if it's more like just touching base and seeing when we then can do something when you've saved in that time as well, then that sometimes can be better.
Yeah.
Well, that's what Nick always talks about.
Yeah,
It's
yeah.
putting a plan in place, even if you have had a default. It's not an automatic
No, it's
about
not.
putting a plan in place to make sure that in the future we can get a yes.
Yeah.
Yep.
And you'd actually be surprised. Like, we probably get a client or a couple or something maybe once every fortnight, I reckon, every 2 to 3 weeks, that has a bad file or something that's happened, and like shit hits the fan. Do you know what I mean? Like, shit's happened, something that they did, you know, several years ago when they were young, and now they're learning their lessons from that.
Yeah, it's so normal.
Yeah.
Sometimes really like, you know, shitty exes that take things out on someone's behalf. We've seen it all. We have a few contacts that can actually potentially help to look into that and see if there's any way that they can actually help assist with improving that credit file before actually going for the application. So that is something that we can help with our clients as well, just to reach out, and we can refer them to those guys. And then, you know, obviously they can suss it out, because, and like I said, it's about creating that plan of place and that clear cut time frame to go, all right, cool, you can't do it now, but you might be 6 to 8 months away, and we do need to make sure that, you know, these banks that we're looking at can't accept it. So let's find a way of how to get that removed or have that repaired, because we're all human. We make mistakes, but there's definitely ways around.
Yeah,
and it's
100%.
never, and like you said, it's not a black and white, get fucked, nothing.
No.
It's a how good is my
Very Nick way of explaining it.
100%. Like there are ways of going, all right, cool.
Yeah.
Not right now, but in the future.
Yeah, 100%.
And I know I'm sounding like I'm full plugging Keystart right now, but they actually are one of the few low deposit lenders that will take defaults,
Yes.
depending on the criteria. So if it's what we call a telco default, which is like your Telstra, Optus, utility bill, needs to be under $500.
So like the services.
That's the word. That needs to be under $500, and then if it's a different type of default, they've got a few different categories, but rule of thumb is 1,000, and then they do have one up to 5,000.
Okay.
That's a little bit trickier. There needs to be a payment plan, or it needs to be a certain
Paid
amount
out.
of years paid out.
Yes.
But there is an option with Keystart to look at some of
Yeah,
those.
I
They're
remember that.
more flexible.
Way
they
more
are.
flexible.
The $500 one, because I remember back in the
That's
day
a
there were
really
a few,
common one.
Yeah, like, you know, they missed the payment, whatever, and then they obviously smash. They get smashed with it. So is it, it has to be paid out, I think it was, and then it's a certain time period, isn't it, or something like that? Do you remember?
It can still appear on their credit file. It does need to be paid, or if it's unpaid, we need to show like some sort of payment plan that they've entered to. But given that it's under 500, depending on how much the client has saved, because Keystart is a low deposit option as well.
Yes.
A lot of the time we can kind of say, hey, if you pay this, and
You know,
we can go down this path.
we might be able. We might be able to
work
do
with
this.
it.
Yeah, that's perfect.
Easy.
Look at you plugging Keystart.
I know.
They're going to be listening to this and be like, Gioia for the win.
We've mentioned this a lot during the episode. What is lender's mortgage insurance?
LMI is short version. It's essentially a risk fee. So if you are borrowing over 80% of the loan, which means you're putting in less than a 20% deposit, the bank likes to have a fee that they charge that really covers themselves. It's their own insurance. They're lending you a large sum of money, and they're insuring themselves in the event that you do default, mispayment, or the house gets repossessed, which is worst case scenario.
Yes.
And they insure themselves through people like QBE, people that we've heard.
Yes.
That's one of the largest ones that all the major lenders use. So it is a fee. Again, it's about 2%, I would say. And it's really just making sure that the bank is covered if for some reason that client can't repay the loan. And that 80% is just their cutoff. If you've got an 18% deposit versus a 20%, they deem 20% tick, 18% no, you need LMI. But with something like the scheme, for example, that is borrowing up to 95% or 98% with no LMI, which is why the deposit is so low. And the government part of that scheme, they're backing the banks. They're really taking on that risk of the mortgage insurance.
Yeah, wow.
It's also capitalised into the loan amount, so you don't actually pay it up front. It's rolled into your loan. So it just means that there's like a base loan plus LMI, and you need to be able to service that full amount. So it's not essentially upfront, so you pay in your repayments.
Okay. If a client wanted to, let's say they wanted to actually cover that LMI fee
Yep.
as well as, you know, the lower deposit just to get that higher
Yeah.
package. Can they do that rather than the whole 20% bullshit?
You can pay LMI without capitalising it into the loan,
Okay.
absolutely, if you've got the funds to do
Yes.
so.
Yeah,
Yes.
Okay,
Yeah.
cool. Because currently, I know you probably can't quote it exactly, but roughly home loans with a 20% deposit versus something with like a 10%, is the rate really different? Like, are we talking like 0.5%, 1% different, or?
Well, I know Westpac, for instance, is their carded rate at the moment variable for non-LMI space for that 20% or scheme, depending
Yes.
which one you're going with, is around 6.21%. And then if you're doing a 5% deposit,
Yep.
it's now 7%.
Yeah, fuck.
a
Okay.
big-
Yeah.
Yeah.
So it is
7.8.
quite a jump,
It is.
but it also goes, the LVR goes into tiers. So so does your lender's mortgage insurance. So if you're doing the minimum 5% deposit, you're going to be paying the most in lender's mortgage insurance. If you don't quite have a 20% deposit, but you have a 10% deposit, your lender's mortgage insurance significantly drops down.
Right.
So it's the difference between
Yeah, right.
like your
okay.
deposit. Yeah.
Yeah, okay.
Yeah.
And
Is
we
that-
break it down a lot. Sorry, we break
No,
it down
yeah.
a lot of the time for clients as well, because you do sometimes get people that say, "Oh, I've heard lender's mortgage insurance is so bad, so I'm trying to save 20%, but I've only got 10%." When you break it down, the difference of saving that 20% versus just 10% plus LMI,
Yeah.
you're putting less down for the
It's almost
10%
like
plus.
half of the
Yeah.
LMI you were paying
so
with 5.
it's really up to you between cash flow and repayments, but we break that down and then
Yeah.
Yeah.
ultimately
perfect.
decide.
And time as well, because let's say it
Yeah.
takes them another 6 months to save another 10% or, 12 months. Fuck, in this current market, you wait another 6 to 12
Exactly.
months, you're potentially paying another 30, 50, 100K
Yeah.
with what, like, I'm currently telling clients, because this is in November, people starting in Jan are going to be paying about 15 to 20 grand more for their house land package like that. Because we've already got some of the builders that we're working with, they're going up about 1.5%. And then every year, every builder does it. 1st of Jan, they go up again. Whether it's 0.5%, 1%. So let's say an average of 2% increase is going to happen on average for everyone. And some of the land releases we've seen have still gone up anywhere between 2 grand to 5 or 10 grand, depending on where it's fluctuated. So if you do an average, most of the houses are going up between 10 to 15 grand.
Yeah.
And that's literally in the next 6 weeks. So what's going to happen over 6 or 12 months when shit's just not slowing down? Suppliers are still hitting builders. Fuck. So you save. They're almost going to be chasing the tail.
Yeah, in like a hamster wheel.
Yeah,
Constantly.
it just keeps going on. So it's like, oh yeah, cool. I'm going to save the extra 30, 40K I need to get, that little bit better rate. But then it's like, oh shit, I'm spending another 40K on the house. So bro,
Yeah.
just
Sometimes
get in.
paying the higher rate, knowing we can refi you after keys,
Yes.
is worth it.
It's probably
Yeah.
worth it more. Yep.
Okay. The next one, and this is such a common question and it's such a difficult one to answer, but everyone asks you, I'm sure, is
How much deposit?
how much deposit do
Yeah,
I
there we go.
need?
There it is. We've been waiting for it.
So
100,000. 100,000.
it case by case,
Yes.
depending on the loan amount.
Yes.
But you've got your 5% option, or really you've got your 2% options.
Yes.
But you're looking at higher interest rates.
Yep.
So the more your deposit, the lower your repayments are going to be, because the lower your rates and the lower the loan amount. It's a good
Yes.
Higher the deposit,
Yeah.
Yeah. So if you've got 2%, 5%, 10%, 20%, they're kind of the space that we work in.
Okay.
And those percentages are off the package price.
Right.
So you're timesing whatever the package price is by 5%, 10%, 20%, whatever the deposit is.
Yep.
But then on top of that, whether you're a first home buyer, how much your land is, if it's over the stamp duty threshold, and if you're in lender's mortgage insurance space,
Yes.
are all going to factor it in. So I would say that if you're a first home buyer and you're getting the grant, you're building, but you're paying lender's mortgage insurance because you don't fit the scheme, which is a lot of clients now with
Yes.
that threshold, and you're paying a little bit of stamp as well, you're wanting to aim more around that 7% mark.
Okay.
As
Right.
a key.
Of what you're going to be spending,
you're
of what the
going to be
Including
package.
down.
fees.
Yeah,
Yeah.
and that
Including
includes
fees.
all your fees, everything straight off the bat.
Yeah,
if you can
cool.
aim for that, it's not quite 10%, but if you can aim for that, you're going to be pretty well
You're going to
covered.
be pretty good. Yeah.
Anything
Perfect.
more than that, wonderful. We can look at lower rates for you.
100%. And there's also like the different caps. So if someone's looking at going, hey, Nick, I want to be in an area where the average house price is 800K, I want a 4-car garage. Okay, cool. You're not going to be 600K. You're going to be in that much higher package. So some of those lower deposits, you're instantly out because they have those caps.
Stamp duty, no first homeowners grant.
You're going to have to go a bit more, because I just tell people, like, when they ask, if they don't want to go through the whole process, you know, with Maddie and to just try and figure it all out, I'm just like, man, if you're looking at these higher 7, 8, 900K house land packages, brother, you got to start at like 60, 80K to try and get some sort of realistic figure into it, which is pretty much
perfect, because it's like just under 10%.
Exactly. Yeah. So
exactly.
you got to start somewhere, and if you're getting close to it, then obviously suss it out. If you've got $2,000 in your bank and you're trying to spend 900K, you're probably a little bit far off. But still reach out and figure it out. So then, because you need to figure out what that figure is, and a lot of people just want that in the beginning, and then they come back after 12 months going, hey, family chipped in some money, we saved hard, blah blah blah, and then
guarantor, guarantor.
Guarantor, that's a good one. Actually,
as well as genuine savings, I would say is a good one to touch on too.
Yes.
Why don't we dive into those? Because I've only got 3 questions left.
Yeah.
So let's jump into
those.
Fuck
your questions. We got better ones.
Well, talking of gen savings, just in regards with the deposit thresholds and things like that. So if you're ever doing the minimum deposit of a 5%. 2 or 5, obviously we're looking at standard major lenders, not Key Start, not Scheme, and it's 5%. As well as Scheme, you need to show genuine savings. So that's 5% of the purchase amount.
Okay.
Flat.
Yep. Right.
So usually if it's a Scheme application and you're going to the 600,000, you need to show $30,000 as genuine savings. Yep. So your deposits paid to the land and to the builder come into account, as long as that was obviously from your pay and things like that. Genuine savings is funds are considered genuine if they're coming from your salary credit, so from your employer, or funds that have sat in your account that, say you sold a car or you got gifted funds for a minimum of 3 months.
Right.
So you need to be able to show that you could have the funds stay there and they've been accumulating over that time to be considered genuine. We can't lodge an application to majority of lenders without evidencing that first. There are certain banks, if you fit policy, that don't really have a genuine savings side of things, like Commonwealth.
Yes.
But of course, with that's a lot of other things like the P&I, the minimum 10% deposit, things like that. But genuine savings definitely does come up with a lot of questions. Anything over 5%, so if you're doing like a 90% deposit, 90% LVR, you don't need...
I wouldn't mind that.
Yeah, literally, great loan amount. You don't need gen savings. So it can come from any source. You don't need to evidence like any minimum amount that was genuine.
Oh, awesome. So if, like, for example, client's a second home buyer, they want to come in, they want to sell or pull some equity out, that's probably a really good a good
it doesn't need to sit there. It can, because, exactly, it's over the minimum of 5%.
So you just bang, off you go.
Yep.
Yeah, cool. That's a good one. And guarantor. This is probably something that we get asked quite a lot more now, I reckon, in the last maybe 4 or 5 months compared to the last few years. Is a lot more family members are going, hey, we've got houses paid out.
Yeah, do a
we
lot
may,
of those.
you know, literally. And they're just like, look, you know, what is a guarantor? What's the situation? Like, how can I try and, is it the parents giving the kid money? Is that a guarantor, or is it, because we have had a few people query that. Can you give us a very dumbed down version?
So
simplified, not dumbed down, Jesus.
Simplified. So benefits of a guarantor: the guarantor needs to firstly own their own property.
Okay.
It can be owner occupied that they live in, or it can be an investment for them. That's fine. Most guarantors we come across have quite a low mortgage owing, but it doesn't matter if you have a higher mortgage on it, as long as when we do a valuation on the property, which is free, we just get one done straight away, there's enough equity in there. So if the guarantor, for example, got the loan 6 months ago and bought a new house, don't think we're going to be able to use that property as guarantor.
Right. As
a security, what we call a security. So firstly, we need to look at those figures, but the real benefits of the guarantor is that 5%, 10%, 20% deposit, cash is scrapped for the client. The only money the client is going to need outlay is the house and land deposits that they pay up front to secure their house and land package. The rest we're securing against mum and dad's property or the guarantor's property. So it's a really big leg up for first home buyers. And on top of that, if the first home buyers as well say, but we've also got 20 grand saved, they can add that on top if they want. So if their servicing is a little bit tight, say based on their income, we can only get them, a 650 grand package. We're using a guarantor, but they've got 20 grand. They can add that 20 grand in cash, and now they can add in an extra 20 grand worth, 670, 20 grand worth or something like that.
Sick.
And we're seeing that scenario a lot where maybe clients don't fit the scheme. They've got close to a 5%, but they're not going to be able to service on those higher rates at 95% with LMI. So we revert to a guarantor. With a guarantor, we get no LMI rate. So as if you've put in a 20% deposit, the rate's much lower. Yes, there is a risk because you're securing your parents' property on there. But 9 times out of 10, once you get keys in the market that we're in, we can refinance you and take mum and dad off of it, and it's just you.
Yeah, killer, because you just need to get that same equity, isn't it? As soon as it's in, boom, you just do like a discharge or something,
we can stay with the same bank, and that's a really quick turnaround, probably 48 hours, one piece of paper that gets signed.
Wow.
Or we can move banks, which more often than not happens because there's some better rates sometimes floating around a year later or 18 months later when they get keys, and we can just refinance you in just your names as long as you service for the loan.
Gotcha.
Yeah, perfect. That's
so
sick.
if your job's changed or something like that, then we kind of got to keep mum and dad on there for a bit longer.
And something to keep in mind as well is if you're not putting in any deposit and if you're borrowing the full amount, your loan amount's obviously going to be
higher,
very high, and you're not really going to hold any equity up front in your property, so that when it comes time to key handover and we get a valuation done, since you're borrowing 100% plus fees sometimes at the start, the market value needs to come in quite high to have that kind of 20% buffer of equity difference. Obviously, the lower your loan and the higher the valuation, you're going to be in the easier it is.
Yes.
So you're going to hope, it just needs to come in quite high at that time.
You can't just rely on market the entire time to do it all. You still need to do your own contributions and help pay as much as you can.
The lower you can get it down, the better position you're going to be in because more of the home you own. Yeah.
Absolutely. That's a good one.
2 more questions. Next one is, what is a finance clause and deposit in a offer and acceptance, which is an O&A?
I can say. That's to do with the real estate agent or the land agent side of things. So it's basically, they're obviously acting on behalf of the seller of the land or whatever it may be, and they just want to know that once you've been accepted and your offer's been accepted, you pay that down payment of that, maybe that 3,000, 5,000, maybe 10,000, depending where you're going, up front to secure it. And depending if titles are out or if they're delayed, they'll have a finance clause of when they want you to obtain formal approval by, to make sure that everything's obviously going to go ahead and that the sale's going to happen. So it just means that we time lodging your application and getting everything sorted within that time frame. If the time frame, because it's obviously sometimes 60 days from acceptance and things like that, if the titles aren't out though until a couple months, like a lot of the ones we're seeing at the minute, the land agent's aware of that, and it acts like a check-in point, and they know sometimes you can't get that formal without the titles or the site access to the block to get a valuation. So we can get finance extensions and work with it that way. It's not a
cut and clear.
The cut-off date, because I know a lot of my clients sometimes get a little bit stressed with that because they see a date when they first sign up and they're like, but titles aren't until 4 months away, and I'm like, it's okay, it's just an initial clause, and we work with the land agent and yourselves and everyone involved to make sure that we can extend it if need be.
Yeah, perfect.
Fab answer.
Yeah.
Lucky last one.
Fab answer.
Sorry.
You could have said that to Gioia too, but instead,
good, don't worry.
The favoritism.
Oh my god. Lucky last,
Add
which
some
is
gasoline to that.
winning.
go. I'm just gonna go fuck myself. How is a mortgage broker paid?
Oh, good question. And good question as well, because one part that we always go through with our clients, but before the process starts, a lot of clients don't know, is it's actually disclosed in your loan documents when you sign a formal approval. So if you're with a broker and you don't know how they get paid, it is always in your loan docs as well, because the banks need to disclose it. But you don't pay us, long story short. So client doesn't have to give us a fee for the appointment. That's how us at Oui Finance work, how Maddie works as well.
I mean, you can if you want.
Yeah. Here's my BSB and account details.
Joking.
But the way it works is we run off of a percentage of the loan amount, but finance brokers are so heavily regulated that all the banks basically charge the same percentage.
Yeah.
So if we're showing you a list of banks, we're not trying to push one over the other just because we get paid a little bit more. Key Start, as an exception, actually pay lower, and here I am plugging them
Yeah.
the whole time. But otherwise, all of the major banks really pay the same percentage, and it's almost like a referral fee for us bringing the business there. But we can't be biased. We're not going to push you towards one bank because we get paid more or anything like that. And we only get paid once your loan settles. So we are all working in the best interest of the client. We want your loan to get over the line. We want you
As
guys
soon
to
as
settle
possible, yeah.
so we
Yeah.
get paid as well.
Well, 100%. And that's the thing, like we like to explain to our clients is like our broker isn't going to get paid until settlement, right? So that means your finance has to be approved and settle. We don't get paid until their slab goes down. So we don't want to waste our time or their time if we can't make it fucking work.
No.
Like it doesn't help anyone. You just sit there, you've had your hopes up and then it gets crushed. Because
Yeah.
like, do you know what I mean? Like there are many builders that do that because they don't know what the fuck they're doing,
Yeah.
but that's on them. Like for us, we don't have the fucking time, man. Like I'd rather delegate the time with people that we can help so then we can get paid so we can put food
Yeah.
on the fucking table.
And we want to give you the options that are most likely to get approved. So sometimes we
Yes.
will give clients options. And if, let's say, we gave you 4 banks and all the rates were the same, that's when maybe we will say, and this isn't based off of what we get paid because it's all the same, but we will say, hey, this one's quicker, or this one's going to need less documents from you, or we're on a tight time frame, you should
Yes.
go, not you should go, but this is the quickest. And then you can make that decision because we just all want to get over the line. Everyone just wants the
Absolutely.
loan settled, start my build.
Yeah,
Yeah, well, you're working in the
100%.
best interest of the client,
Yeah.
and you need to make sure that the client understands what they're signing up for, what bank they're choosing, and
Absolutely.
why they should be looking at each individual bank. Like knowing all their options before they sign up per se.
Yeah.
And
it's-
sometimes,
Yeah, go.
I was just going to say, sometimes there's only one bank option.
Yeah.
Depending
And
on like
if
lender
on there.
policy, if they're only servicing the strongest here because, they're not going to take child support payments as much as this one would because we can not claim a dependent, all these other little features that can come into play. And sometimes when we sit down, we say there's only one option here because this is the only option we have right now. Obviously, depending on if you've already signed on an offer and you want to get it rolling, they're happy to go through with the one
Yes.
bank, knowing that that's what they've got right now. But like you said earlier, you're not locked in for the full 30-year loan term.
Nah.
It's all variable. Once your loan settles, again, we can look into refinancing and exploring somewhere else.
And normally that's when a lot of the banks become a lot more competitive.
Yeah.
Once you've actually got the loan and the home's been built, all of a sudden it's like, oh, free, like
Yeah.
new business, bring it here. Whereas trying to deal with all the delays and all that shit with construction loans, some banks, like you guys said, you've got so many of them, but some of them start narrowing down very
Yeah.
quickly.
Yeah.
They don't like having that type of product maybe versus others, but as soon as it's established, it's been
More
it's-
doors
it's
open a little bit,
Exactly, yeah. And like you said, no two circumstances are the same. So what your situation is and all that, the more better rule of thumb is the higher your income is as a base salary with a higher deposit, the more options you're going to get.
Yeah.
Absolutely.
If you've
And the
got
lower the interest rate.
exactly it, the lower the interest rate, the less debt you have, the less risk you are. Those are it's not common knowledge, but that is the commonality of what most of the banks really want. The lower the risk you are and the more you can repay, the better you are seeming like for that
client.
bank.
An application,
As an
yeah.
application, because at the end of the day, we are asking them for money. So we got to put our best foot forward to make it look the best so then they can go and consider us. If you don't like it, well, fuck, man. Like, you're still asking someone for money. So
Yeah.
they
$500,000
tend to send
half of the
Yeah.
time.
yeah, like they're going to set the rules. So we just have to play with them and see what we can do to get you in. Because
Yeah.
if you just, because we tell the clients all the time, and more now than before, you can't just chase a rate. You need to get the house built. You can chase the rate
Then we
after.
can chase the rate.
Yeah.
Exactly it. But if you're just chasing rate, I want this lowest repayments. Brother, you've only got one or two options.
Yeah.
It's either you're in or you're out.
Yeah.
And by the time you wait another 6 to 12 months, there's options maybe even more limited to just one. So
Yeah.
sometimes, it's like the whole time in the market. Yesterday was better than today.
Yeah.
It's better than tomorrow. So you just got to figure out if you want to get in. Otherwise, you're just going to be playing fucking like little hamster wheel, just going to keep chasing yourself around
Yeah.
in circles.
Yeah.
Nick's saying you've got one or two options. You're in or you're out.
There's no in between.
Other options.
The neutral is you're in.
Yeah.
Thank you so much, Gioia and Maddie, for coming on board.
Okay.
I feel like that was a really good episode where you guys have answered the questions really, really well, really clearly, and like very simplified.
It was
form.
54 fucking minutes. Where the fuck did it go? Bro, time flies when you're having fun here.
Yeah. So
Chatty
much
Cathy's.
fun.
Yeah.
Thank you so much for coming on board again, and
Thank you for having us.
for answering so like quickly. So
Yes.
honestly, so
I actually got one more question. I want to go back to the guarantors. So we've talked about,
yes.
you're like, oh.
here we go.
So obviously, is it applicable just for first home buyers? Can a second home buyer re-entering the market, can they have a guarantor option?
Yes.
Yes?
Yeah, they can.
Okay. Third of all, with the guarantor situation, let's say that the parent is willing to do it.
Mm-hmm.
Can that home that they're going to use be used for a different property as well? Can there be like two more?
As long as
can there
they've
be
got
two
enough
mortgages?
equity. And this is
Okay.
something that we discuss with the parents, especially because if it is parent-child, depending on the amount of equity you have, we always want to have that conversation of saying, hey, do you have other kids? Are you
Yes.
thinking of going guarantor for child number 2, 3, 4?
Yes.
Keep that in mind.
Okay.
Because if something happens in the market and your equity decreases, or you want to sell this property or anything like that, do you have room for the other kids? Or when is, if they've got a child that's 16 and one that's
Yes.
24, hey, by the time that child's ready to do their house, we're
Yeah.
probably going to have you released off the original one, and then you can go again.
You can go
Which
again.
is most of the cases that we have. They say, oh,
Okay.
we already did that for our last child and they're not.
Yeah.
Or, no, we're just doing it for this one. The other one's way younger. We don't need to worry
Yeah.
about it.
Okay, cool.
Yeah,
So
but you need to have that equity. Or if you've got another property, you could have,
Okay.
if they've got 2 investment properties and one owner-occ, you could.
you can do it that
Link-
way.
link. The
It's just
other
like a
ones.
caveat
Can
on the
link it.
title.
Okay.
Yeah.
Can you
Yeah.
but can you do multiple? So like, let's say they had 3 kids, they all want to build. Can they use the one property for the 3 loans against it, or does it have to be 3 different properties?
They just need to have a lot of equity.
A shitload.
Yeah.
But basically, fully cashed out,
Yeah,
it's
but
worth
they
like.
will have a caveat on their
Okay,
on
cool.
their title. So
Right.
it does put the parents' property at a much higher risk.
Okay.
And then if they would like to sell, again, that really limits
Yes.
their options. So
Right.
we would probably recommend that they speak to like a financial advisor
If they're going
or
to do
something
something
like
like
that.
that.
We,
Yeah.
yeah.
Okay.
If they want to do something
Okay.
that
One more?
hectic. Yeah.
I'm just throwing. There's all, as you know, there's all sorts of situations out
Yeah.
there. If someone wanted to build an investment home, do you know what I mean? They don't have enough right now to move into something themselves, or they're happily living at home, and the parents want to come in as a guarantor, but to do an investment home for the kids. Can it be done as a guarantor?
You just did one like that, didn't you?
Yeah. Did
Yeah.
I?
I think you did maybe.
Did I?
As an so I think I had the scenario come
Oh,
across.
yeah.
So yeah, guarantor can still assist the client if it's going to be investment purposes and not owner-occ.
Okay,
Yeah.
perfect.
Very limited options, but it can
Yes,
be done.
but it can be done. It's just good. Like, I think I had a client that we were querying that for a while ago.
I think that's what I was
Yeah,
thinking
yeah. I
of.
think
yeah.
that's okay. Actually, it was us. But yeah, it's just cool to see if it can or can't, because
Yeah.
the guy is happy chilling, and parents like, we want to help you
Yeah.
to get into something like, and just have something against you, like,
Yeah.
just chill here, because it was a single kid, like, yeah, single
No
kid?
siblings.
no siblings,
Yeah.
yes, yeah. So
only child.
Yeah.
that's the one.
Single kid.
Yeah, single kid.
Yeah.
Single.
The other thing we can do as well is we can also, instead of going guarantors, so not having those titles tied together, not having a caveat on the title, we can look at cashing out funds on the parent's property first.
Okay.
Then that acts as a gift
Oh.
to the child. The downside of that is now the parent's loan has increased, so they're paying they're basically paying interest on the loan that they're cashing out to give to child.
Yes.
Whatever they want to do with the kids in the background, if
That's on them.
so-and-so is paying so-and-so, that's fine. But that is a much, it's more de-risked, I guess, because you're not mucking
Yes.
around with titles. If they want to do it for child 2, 3, 4, 5, they can sell the property if they want to as well.
Yes.
Lot less risky
Keeps
there.
it standalone, not linked.
Yeah, completely
Yeah.
separate.
Yeah. Okay.
So
That's actually really cool.
that's another option which acts as a gift.
Yeah.
yeah,
Yep.
awesome. Thank you. That's all my questions.
And more
Okay.
banks can look at it that way because only
Yeah,
a few banks
more
can do
options.
guarantors as well as construction guarantors.
Right. Yeah, so you're just narrowing, whereas
Yeah.
you can then reopen a few more
Way more
options.
Because it's like
Options.
we said, that 10 or 20% deposit, you get
Yes.
more options.
Yeah.
Yeah.
All right, ready?
All right, yeah, I'm done
Yes.
now. I'm done bothering the girls. Thank
to,
you so much.
Thank you,
honestly,
and
absolute legends.
To the listeners, I hope this gives you guys like a bit more of an insight of how much juggling your mortgage broker is doing for you. Like all these scenarios that we've been throwing out, we're not like making up out of nowhere. We've obviously come across it somewhere, somehow along our like building or like broker journey. So it really does go to show how much knowledge you guys store like in your brains with different types of banks, different like grants,
Scenarios and
different
everything.
scenarios,
And the fact that you guys still remember half of them, fuck.
yeah, like
Mm.
bro.
Crazy. I forgot what I fucking ate last night, man. Jesus.
If this doesn't convince you to use a mortgage broker instead of going straight to one lender, I
You're
don't
living,
know.
well, you're
Not
living
to be
under
a
a
mortgage
fucking
broker.
rock.
I don't know what else would convince you, because looking at this is why you choose a mortgage broker. This is
100%.
why you work with a mortgage broker, because they're running all these scenarios in the background, and then you just get presented a couple of options going, these work.
Yes.
Yeah.
Meanwhile, you guys are like, typing and calculating all the way in the background.
Yeah.
Thank you so much for coming on board. We really
Thank you.
appreciate it.
Thanks.
And let's plug. So you can find Oui Finance on Instagram, Facebook, TikTok, website, and you can Google you guys, and your website will pop up in all your socials.
And if you reach out to Oui Finance, ask for Maddie.
Ask for Maddie. Let them know that you heard us on the pod. Plugging Mr. Enthusiast.
Yeah.
You can find us on Instagram. Did I miss one of your guys? One of your ones?
Oh.
No, I got all of
TikTok,
them.
yeah.
Okay. Sorry. Plugging Mr. Enthusiast. You can find us on Instagram, Facebook, TikTok, website, Google, YouTube, Apple Podcasts, and Spotify.
Yes.
If you guys could leave a follow, subscribe, or leave a review or rating, it really helps us in the background.
Yes.
And just remember, guys.
We're not here.
2.
Fuck spiders.
Fuck off. Thank you.
Bye.
Bye.